the environment that we find ourselves in now is foreign territory. I've never seen anything like it, honestly. I mean, there have been a few times where there were premiums like this for a very short period of time, but I have never seen anything like it now at all, ever. Um, at a time when we have the largest deliveries in the history of the COMEX market, month over month over month over month, and the traders above all of us are laughing and saying, the suppression has worked. The suppression of narrative and of rhetoric has worked. The suppression of price has worked. Um, the belief that the road to retirement is paved with stock certificates, mutual funds, and cryptocurrencies has worked. And so what you have is at the highest level, central bank and whoever the hell is standing for delivery on all this gold and silver here in the United States, um, they're buying it and using the suppressed price, even though it's gone higher, the mitigated price to stand for delivery. The people in this country haven't. And as a result, when Rick says 0.5% allocation to precious metals in this entire financial matrix in gold and gold related equities, not just physical metal, but equities too, says a lot. And it says everything I've ever said to you about the little man rule, where the little man always is late to the party and typically loses because the big guy who's closest to the information, forget about the wealth, that's a given, but the information puts them in a place to where they are able to pickpocket the world's commodities, in this case, with no fanfare, with no competition, at pennies on the dollar and a subsidized price. It's just like the comment that the guy made who's running the BRICS grain exchange, that we produce more, consume more grain than the West, but they control the price on COMEX. That will change with the development of the grain exchange. Well, they know what we're doing with the metals prices. That's why they're building the BRICS Metals Exchange. That's why Shanghai has the cumulative volume of Shanghai gold and silver exchanges has surpassed that of the COMEX. The world is wise to what we're doing. That's why they're arbitraging with the 36.36 closing price yesterday to send as much as they can because they want it at any price. The people in this country are asleep at the switch. And so you have dealers that are literally loaded with product. Here's a good example, right? So right now we're selling backdate gold eagles. Let me just look and see, because oftentimes I have a bad habit of selling things lower than we have them listed for on our price list. But let me just look at one thing right here. So we are selling backdate gold eagles for less to the public, for less than we can buy 2025s for. So imagine you're a primary dealer who has an obligation to buy all of this stuff, not only 2025 Eagles, but maples and all different sizes and platinum coins and silver coins and Philharmonics and Kangaroos and Britannias and Krugerrands and all of this stuff. You're buying brand new stuff, and yet you're selling the backdates for considerably less to the end user than you're paying for the brand new stuff. So premiums are ridiculously low, and I've never seen it like this ever in my career. So to his point, look, we were paying $150 over spot for gold eagles during the pandemic. We were paying 11, 12, 13 over for silver eagles during the pandemic. Most of my career, you would have received north of 3% over spot on gold eagles when you sold it. And what we see right now to me is an anomaly, and it is a function of the public really having very little awareness of what's happening, and the ability through suppression of price, through volatility of price, and through all of the other markets getting so much fanfare and attention that the lack of demand in the retail space has created an environment where dealers are bidding spot or lower on many things, American Eagles really being the exception. But you shop around and you'll find that our bid prices are typically higher than everyone in America. This is an unusual time. He's right now. Yes, you buy over and you're getting basically under. It's never been that way in my career. And unless you think things are completely different and will be this way forever, I would say this is just an anomaly, if anything else, because when the public wakes up, what is an overabundance in inventoried product can just disappear in the blink of an eye. We've seen it before. We see it happen sometimes in short duration and sometimes for 2 to 3 years during the pandemic and the bank failures in 2023. So have patience. It is an anomaly. It is the case right now, But if I were to give you a timeline of the 35 years I've done this, probably 34 and three quarters years, it's not been that way. It is right now. I don't think it will stay that way. I truly don't. So much of the boon we've seen in equities and in crypto and treasuries and everything was a courtesy of the Japanese carry trade, where you can borrow in yen at a very, very low rate, convert it to dollars or other currencies, and buy assets, interest-bearing yielding assets. And that's unwinding. So yes, just as bullish as it was for markets in that environment where traders had really a free lunch, borrow at zero or barely above zero, convert to dollars and make the spread in treasuries, in Nvidia stock, in Apple, in all of these high-flying, high-performing assets. Well, when it starts to move the other direction and rates start to move higher and the Bank of Japan has to start defending its currency, yeah, it very well could. We'll see how high it goes. But what we are witnessing, in my opinion, is the unraveling of a sovereign debt crisis. We have a massive sovereign debt bubble that has to unwind. And really the question is whether you're talking Japanese yen bonds or U.S. Treasury bonds and dollars. Who wants that debt any longer? And especially when you realize that there's a large contingency, I think, that is saying, look, we would much rather have access to it than a yielding investment in an environment where you are seeing potential to have your treasuries or your assets frozen if you're not aligned with the United States, especially now. It's very dangerous. And then, it's not just what's happening there. You're talking about something in this great big beautiful bill that not a lot of people are talking about, but it's Section 899. And Section 899 of this bill is a law that's proposing using taxes on foreign investments like holdings of U.S. stocks and bonds as leverage in economic disputes. And so the law allows for a 20% tax on foreign income linked to the U.S. investments and removes the long-standing exemption for central banks holding U.S. treasuries, which could make government debt less attractive and lower yields by about 1%. And I had to really think about how that 1% comes into play. But basically, it comes into play that if you have a 10-year treasury yielding 5% and put a 20% tax on that treasury, 20% of 5% is 1%. And so instead of earning 5% on our U.S. treasuries, these countries are now going to earn only 4% because of this tax if it goes through. These are the things that are just very silly. At the time when, reducing incentive for foreign investors who demand higher yields to compensate for inflation, for the tax hit, for all this stuff, is giving them incentive to shift away altogether, and it's creating more pressure on U.S. treasuries as well. So we are entering a period of time potentially of much higher interest rates in places like Japan and the United States. And yes, you talk about unraveling. All of this stuff is a function of suppressing interest rates, which created distortions in asset prices, because you could borrow money at next to nothing, invest it in assets that continue to move higher. And that's great until it doesn't work any longer. And as it unwinds and people have to unwind those positions, yes, it could be very, very, very bearish, to say the least, in a polite way of saying it. So yes, to his point, it's certainly something worth watching, especially in Japan. Alistair McLeod told me 2 years ago that he believed the state owned 20,000 metric tons and the people 18,000. 38,000 metric tons was his guess a few years ago, which would be 5 times more than we supposedly hold. And the theory was, through these state-sponsored programs, that you are then literally, sucking all of the world's gold either to the state or the people. And now, would you knock that off, Mila? Sorry. So now we have a situation where they're asking not only the insurance companies to dip their toe into the water, the PBOC is pushing banks to buy gold with dollars right now and have increased the import quotas. They're telling them to buy it with dollars specifically for several reasons. One reason is so that they can put it in a reserve asset like gold instead of in U.S. Treasuries. And they're even going as far as saying, go out into the open market, buy dollars, and then buy gold with it, because that then pushes down the value of the yen. And then when they convert the gold into gold, pushes up the value of gold, to which they've been accumulating at cheap prices. So, yeah, absolutely. They are unquestionably on a not only on a state-sponsored gold buying binge. The PB or the People's Liberation Army is buying a ton of gold too, and their people are through these state-sponsored accumulation programs. And in the name of the state and of national security, if push came to shove, yes, that is a theory, and I wouldn't doubt it. Um, you know, they're just trying to figure how can we get the majority of the world's precious commodities like gold, like silver, and others into the hands of the Chinese, whether it be the state or the people. And when all of this is being purchased through state-sponsored programs, it wouldn't be hard for them to figure out where it all is.